RAPT stock plunged to what looks like a 52-week low and lost around 70, roughly approximately 74% yesterday, the 20th of February 2024. This is after the FDA verbally notified the company that a clinical hold has been placed on its phase 2B trial of zelnecirnon in atopic dermatitis and its phase 2A trial in asthma. I think atopic dermatitis refers to dermatitis associated with allergens, and almost 3 years ago we covered this talk, and then analysts had price targets of around $71 or thereabouts. But in any case, the company has also indicated that they will thoroughly investigate this case, adding that the patient involved has a complex medical history, including the use of herbal supplement known to be associated with liver failure, and reported COVID-19 infection during the time of the event. So I think this event we're talking about, this trial began all the way back in 2001, because that was the last time we actually covered the stock, and that was then it was it was showing a lot of strength. I think at that time the drug hadn't been known, it had a code. It wasn't known as what it is known as zelnecirnon, zelnecirnon. Then it wasn't known as zelnecirnon. Okay, so maybe it could be the fact that they're investigating this, and the fact that they already knew that something might come up from this study, given what this patient was involved in. Maybe market participants might redeem the action they took yesterday to sell the stock. They might redeem it. Redeeming meaning they might look at it again. Let's see. There's fresh news here. It's saying that Rapt Therapeutics target cut to $15 per share from $35 by JP Morgan. Okay, so the JP Morgan they're spooked already by what happened yesterday. But they could be wrong. They could be wrong. Definitely, yes, it is definitely a 52-week low. Market participants are definitely, for sure, they're definitely going to buy this dip. Whether it's going to rebound and come back into this region, it has been trading in since since this year. It's been trading within it's been trading within a sideways range of just roughly between. I would say roughly between. It has a low of around 23.23 and highs of around 26.49. So market participants have they were nicely all throughout this year. They were having a nice time scalping the stock and cashing in on small gains, but come yesterday, the FDA disclosed, all that news. Everything changed. But even at that, I would actually say that from early November, the stock was actually, showing a lot of strength. You can see they had a very decent angle of attack. It wasn't a very steep angle of attack, and reached the highs of 25.61, and has been consolidating since then. This company is actually owned by one of the major drug companies, so it is not one of those clinical stage companies that just independent. So this is part of the whole, part of the big picture, if you like. This is just my opinion. So yes, the stock has plunged below all of its Fibonacci projections on this 1-day chart. So the next upper projection will be 12.46. The odds of that happening, possible. When is it going to happen? I can't exactly say for sure when it could possibly happen. Let's move down to a longer interval chart, the 1 week chart, and we have upper projection of 10.53, and then this is the weekly chart. We have 15.94, and the projections go all the way towards $47. It's all the way up to $47. And let's come back and look at the 1 day chart again. So there's what looks like a significant gap between the 12.46 upper projection and the next Fibonacci projection of 22.1. Okay, so it looks like a whole $10 gap, a whole $10 gap, almost a whole $10 gap between. Okay, just let's roughly call it around $9. So in between here, a lot of things can happen, but and also even in between here, a lot can happen. So with this retracement all the way, with this we did trade in at a almost what looks like 100% discount to this upper projection. It doesn't feel, you wouldn't feel very confident that a rebound will happen anytime soon, but indeed it can even happen in the next trading session. But let's finish up there. After this 22.1 upper projection, the next projection is 25.86, and then the next one will be 28.11, and after that we have 29.99, and then after that we have 31.74. They all go all the way towards 47.52. That's quite similar, quite within the same range with what we saw on the weekly chart. So I think it wouldn't be out of place if we try to see whether we can determine a few probabilities in this case. Would that be something that will be helpful? Let's see whether we can do that. Let's see whether we can do that. Let's get a Z table and see what we can do. So let's use this formula: individual data minus population mean divided by standard deviation. So we can try to find the probability of the stock either rebounding or even retracing further. So yes, we can actually do that. Why not? We can try. And then let's look at the formula again. It's individual data value, that's the current price of 6.87 minus which moving average are we going to use? We're going to use let's use the standard deviation is at 20, so we're going to use the 20-day moving average, which will be 24.36. so we call up the calculator and we say 6.87 minus 24.36, and we have 17.49. Let's be sure that we are using the right correct moving average. 20, yeah, we're using the same, 24.36, and then the standard deviation is 4, so we divide that by we divide this value by 4, and we have 4.3725, and we come to this Z table, and let's see. Okay, so in the next in the probability that so what we're trying to find out now is the probability that its price will be lower. The probability we're trying to find out right now is in the context of the last 20 trading sessions, the probability that the stock will retrace even further, and then we have already determined a value of minus 43725. Then we have to that we're here now. We're looking for the Z table. This is the Z table, and unfortunately, the Z table doesn't have any value beyond it doesn't have any value beyond 3. It doesn't have any value beyond or above 3, or okay, above a -3, though we don't have it. So giving that 3.09 gives us a 0.01. Already we can see that that will give us 0.001 multiplied by 100 will give us 0.1. So the probability that it's going to print lower prices looks like is 0.1%. Okay, I mean, based on what we have just done now, it could be less than 0.01%. I think the reason why that is the case, I mean, is I guess because we're using very divergent values. We're using I mean, the stock has retraced significantly away from it's away from that moving average. That moving average is around 24.36. I mean, the point I'm trying to make is that this plunge has taken the stock away from its average. It's just a validation that something has gone wrong. Something has a devaluation has occurred. Money has left the table significantly, and things are out of sync at the moment. So, but in any case, we can actually clearly see what's going on right now. 7.18 is the pre-market value. Yeah. So yeah, it's just a validation that statistically just a validation that a rebound is very much likely, and we have just to some extent, it's not definitely very precise that a rebound is definitely going to happen, but we are clearly seeing a rebound. As you can see, 7.18 is what's going on. So we can just quickly come back to this 1 minute chart and see what we can find there. On this 1 minute chart, we have the stock is indeed trading at 7.18. So yeah, RAPT plunged yesterday, and it is showing some strength in this pre-market session of today, the 21st of February. So see what you make of it, and I will definitely continue to update